I've decided to do a little mini series of 5 videos, one a day over the next 5 days, where I'm going to go through what I think are the top 5 tax return mistakes to avoid in your tax return. So today's one, the first one, is leaving it too late. And this is a real problem for 2 reasons. One, if you are overdue with your tax return, if you miss the deadline, you have to pay a penalty. Why do we want to be paying HMRC more money than we have to? Nuh-uh, don't do it. It is not worth the extra money that you've had to work hard for. The other reason is, even if it's not overdue, even if you did it, say, on the day of the deadline, you then have absolutely no time to plan for the potential tax that you need to pay, which could seriously impact your cash flow and could leave you in a situation where you don't have the money available to pay the tax, and then you're having to pay interest to HMRC. So again, don't do this. Get your tax return done early. What I have found over the last 10 years of doing this job and working with hundreds of small business owners is that it is the people who are disorganized with their finances who are the ones who end up owing HMRC extortionate amounts of money, getting chased up by HMRC, having really, really, really poor cash flow, having a lot of stress because of it, and ultimately putting themselves at risk of losing their business. Okay, being organized, in particular with your finances, is such an underrated and important quality to have as a business owner. Do your tax return this side of Christmas. My second tax return mistake to avoid is failing to put all your income on your self-assessment. So if you're filling in your self-assessment because you have a self-employed business, but you also have an employment, your employment income still needs to go on your tax return, even though you've already paid tax, and HMRC will therefore be aware of that income, still needs to go on there. If you have interest from savings accounts, that needs to go on your tax return, unless it's a tax-free ISA. If you have a second self-employment, but perhaps you didn't earn very much money through it, it still has to go on there. So don't forget about other sources of income, because there's a good chance that if you do, HMRC will find out about it, they will catch up with you, and then they'll expect you to pay over the extra tax with interest. The third thing to avoid doing when you do your self-assessment is forgetting to put any pension contributions on there. So even pension contributions that you've paid through a work pension scheme, if they're employee contributions, you may be able to get extra tax relief on them. This is really important and something that I've noticed is quite often overlooked, especially if you are a higher rate or an additional rate taxpayer. Tax return mistake to avoid number 4 is putting things in the wrong boxes. I had this recently with somebody. They earned some income through renting out a room in their own home. It was eligible for the rent a room scheme. However, they put it in the normal rental section of the tax return and therefore didn't get the tax relief on it that they could have. And if that hasn't all scared you enough, tax return mistake number 5 isn't so much a mistake, but it's something that I found over the years a lot of people aren't aware of if they've not experienced it before. If your tax for the year is over a certain amount, HMRC will expect you to pay another 50% as a payment on account towards the following year. in the January when you pay your main tax bill, and they will then expect you to pay another 50% 6 months later in the July. Again, this is an advanced payment towards the following year's tax bill, and this really catches people out if they are not expecting it, because it basically means that in that first year that this is applicable to you, you actually end up having to pay double tax. So don't get caught out on that one. If you want more information about these mistakes and you want to learn how you can avoid them, then book in a one-to-one session with me, because I can go through all of this with you in detail and give you advice that is specific to your situation, so that you can still do your tax return yourself, but you'll have a lot more peace of mind you'll have a lot more peace of mind that you're getting it correct.